So formal welcome to everyone joining us today for day 5 of the meeting. We are midway through the natural resources item. So without further ado, I will pass back to Eamon, who's leading the session on water.
Good morning, good afternoon, and good evening, everyone. We'll continue the section on water. The next changes that we'll discuss are to this section where we considered whether water meets the definition of an asset and whether water is measurable. These sections are in paragraphs 4.10 to 4.28 of the draft CP. So the task force made a couple of changes to this section. We added a criterion and clarified that water in its natural state is recognized as an asset in the financial statement if it satisfies the definition of an asset and its existence is certain and if it is reliably measured. Previously, we only considered the definition and measurability. The task force noted that the concept of existence and certainty is also important in the context of water, because even though one could argue that water exists and can see it, the water is always moving freely. Okay. The task was clarified in paragraphs 4.16 of draft CP that water in seas, rivers, streams, lakes, and groundwater aquifers do not satisfy the definition of an asset because it could be difficult to ascertain control, as the water from those sources is naturally occurring and is usually not actively managed. The water levels also reduce or increase as a result of natural causes such as evaporation and rainfall. I think I'm showing the wrong slide. Apologies for that. The task was also clarified in paragraph 4.17 of the draft consultation paper that water in dams and canals may satisfy the definition of an asset when management may demonstrate control by actively managing the water levels and tracking and monitoring the water levels to achieve a service objective. So for example, water levels in the canal may be actively monitored and managed to ensure that the ships pass through the canal, and water levels in a dam may be actively managed to ensure that there's sufficient water for power generation or for water supply. Okay, I'll pause there and I would like to ask the IPSASB if they agree with these task force recommendations. Okay. Stop sharing.
Thanks, Eamon. So we can open up for any comments on those recommendations from the task force. No, okay. I think we're content with that. So move us on.
Thank you. So the task force also clarified that water in dams and canals is not measurable. So even though, like we said previously, the volumes of water and the quantities of water in dams and canals is reliably estimated because of the active monitoring, the water in the dams and canals may not be separately valued because the water is accumulated through natural causes. The value of the water is actually attributed to the infrastructure itself, the infrastructure asset, the human-made assets, rather than the water itself. Therefore, the value of the water in dams is included in the value of the human-made structures, which make use of the impounded water. The measurability of water in seas, rivers, streams, and lakes was not considered because we had already indicated that the water from these sources does not meet the definition of an asset. And I'll also pause again, Mr. Chair, and ask if the board agrees with that recommendation. Let me stop sharing.
Someone? Yeah, Ajith.
Thanks, Ian. I think when I looked at the new paper, I feel that there is a significant improvement from what was presented last time. And I wish to thank both the staff and the task force members for making those improvements in relation to the paper. I noticed that the staff recommended that that water in a reservoir meets the definition of an asset, and that's a significant development, and I'm in agreement with that position. Then staff has mentioned that there is a measurement uncertainty in relation to water in a reservoir. I think there is a measurement uncertainty in relation to water is a debatable issue. So I looked at how this water was addressed in the living resources, because we need to have a common policy in relation to what measurement uncertainty with living resources. Now, in the case of living resources, we decided that the staff recommended that the living resources held for financial capacity can be reliably measured. Now, there is also a possibility that water is also held for financial capacity in some situations. For instance, water that is used for agriculture and distributed for cash is can be probably be considered as a water held for financial capacity, because I believe for living resources we consider things like forests, which are for which the trees are sold, or then it will be considered as for financial capacity. Similarly, water for agriculture purposes is distributed without any further processing, and it's held for. So therefore, I think in those situations, it will be considered similar to forests, which are sold for trees. So that's one aspect. Then when you look at living resources, we look at operational capacity. In the case of living resources held for operational capacity, the staff recommended that it cannot be reliably measured. Also yesterday's discussions, we thought that this needs to be reconsidered. So I think we need to have a common approach in relation to both water and living resources, in relation to measurement uncertainty for living resources as well as water, in relation to water held for operational capacity and living resources held for operational capacity. Because measurement techniques can be used in order to find out the value for living resources held for operational capacity as well as for water. So we need to look to see whether we need to have a common decision relating to both water held for operational capacity as well as living resources held for operational capacity in relation to that. But I think it's a matter of a policy issue as well in this case, because the measurement uncertainty in this case is also depends on the level of reliability that you're looking for. It's not the same as the water that can be sold when it comes to operational capacity, because measurement techniques have to be used. And one person might consider that there is a measurement uncertainty. Another person might consider that it is not measurement uncertainty. So therefore, we need to have a common policy in relation to, in fact, all natural resources, which meet the definition of an asset, but there's an issue relating to measurement uncertainty. So I think that's a matter that needs to have a policy decision that runs across the entire all natural resources, which meet the definition of an asset. Because in the case of water, we have decided that it meets the definition of an asset when it's in a reservoir. Thank you. Thank you very much. Yes.
Thank you, Ajith. I'm going to take comments from others before I go back to staff. I think there is a general issue that we do need to make sure that we're consistent in terms of the principles across each of the areas that we're looking at. and then staff need to make sure that where they see differences in the factors influencing the ability to measure, that those are brought out. But I think that's an elaboration of the instruction from yesterday, which I think came out from the discussion around living resources on financial capacity and operational capacity. Okay, so go to Camira and then David and then Renee.
Thanks, Chair. I only have a comment in relation to how the paper also goes to the conclusion that those, although the water can be considered an asset, that it's not practicable to measure it or to assign a value, because in the paper we discuss, or we even talk about the possibility to allow the reporting entities to disclose information about the volumes of water and so on. If they have information about the volumes, maybe it would be also possible to assign a value, a monetary value to those volumes. So we should not be too categorical to close that possibility. And also when we, especially in paragraph 4.27, that we are like already prescribing that in the case of water in dams and canals, the value of that water should be allocated or attributed to the infrastructure and not, but perhaps it's also possible to maintain them separate, so not necessarily they should be attributed to the infrastructure. So I think we should be a bit more open on this aspect. And what I feel, and perhaps just as an idea in the future stages of this consultation project, if we could evaluate the possibility to invite experts in the matter, just for to understand better how it works in practice, because now we are trying to form our preliminary views, but personally I feel that we are missing a bit of more specific knowledge on how it works in practice. So if it's feasible to do a reliable measurement or not, or how it's really how it works. So thanks.
Thanks, Camira. I mean, I think staff has already done some research on this, and I think with one possible exception, it's not the water itself that's actually valued, it's the infrastructure. And that, you know, in terms of my own experience, earlier in my career, I was involved very much in the water industry in the UK before, during and after privatisation. And the values were based on the infrastructure. It's never actually the water itself that actually is valued. It's the infrastructure and what you do with it, the operating costs, treatment costs, and so on. And I think that's probably, you know, that's one of the sort of specificities I think probably needs to come out a little bit more strongly. You know, in terms of, there's a general point about the approach to measurement, but I think there's also some specifics in this context that we need to pick up. So thanks for that. So go to David, Renee and Scott.
Thank you, Ian. And I don't want to labour the point, but I had much the same point as Camira. The wording in 428B, the final sentence that says this is because the value of water in dams and canals is included in the value of the human-made structure. That does suggest, as Camira has said, that there's a value of water in there, and I know that's not what is meant. So that really needs to be redrafted.
Okay, thanks, David. So specific instruction to look at that in the context of the overall analysis. Renee, Scott, and Alve, Adrian.
Yes, thank you, Chair. So my comment is in relation to water and its natural resources, and the boundary of whether it's control or not, and really that element of the definition of an asset. So the paper suggests, you know, the paper uses human intervention as the key factor, the fact that water in its natural state cannot be easily tracked or monitored. It doesn't seem to really assess other factors or other elements of control, for example, legal ownership or access right, enforceable rights. So, for example, in Canada, legal ownership of water, it's primarily a provincial and a federal jurisdiction. So maybe we could consider expanding that analysis to consider if maybe ownership or those other factors have an impact, and maybe not be so just focused on the human intervention. Thank you.
Thanks, Renee. I think that certainly goes in line with making sure we assess the factors against the conceptual framework factors. So thanks for that. So Scott, Adrienne, Lindy.
Thank you, Ian. I'm actually I want to speak in support of Camiro's comment. I think since this is particularly a consultative paper, we don't want to limit input that we get. I think from an accounting perspective, the paper may be written correctly, but when you consider the significant advances in sustainability reporting over the last 5 to 10 years and measuring water in that period of time, I think there may be some missed opportunities. We may end up in the same place, but I think since this is a consultative paper, it'd be nice to expand it. For example, Puma has actually costed out the water in what they have an environmental balance sheet. Coca-Cola and other type of companies which significantly rely on water for their products have actually measured water and valued water, and they've actually had auditors attest to the accuracy of the number. So I think we'd just be missing, with the way it's written, we're going to cut off that discussion, and I think we ought to at least leave it open to see what we can find out.
I think, Scott, I understand what you're trying to do, but I think we have to be very careful that this is a financial reporting project for natural resources. And if I'm talking about Coca-Cola, then I'm talking about parts of their production plant and that kind of thing. So I think we have to be really, really careful that this is a financial reporting project. It's within the context of our conceptual framework and so on. So I think we just have to be really careful not to sort of, there's loads of things we could do, but this is a financial reporting project. It's not sustainability reporting, it's financial reporting. So I just think, I appreciate the comment, but actually, I think, we do have to really regard the boundaries. And there is a credibility issue here for the board. If we start allowing everybody to put everything on, there's going to be a real problem. So I think we really do have to be very tight on the reasoning for what we're doing. So, Adrian, sorry, yeah, okay, if you want to come back on that, Scott, but I really do think, we've got to be tight on this. It's not sustainability reporting.
My point, Ian, is there's been significant advancement in this area that I think can actually inform us. I'm not suggesting they do sustainability reporting. My point is, I think there's been some significant advancement over there. It is a CP after all. So they're trying to learn.
So probably the best way to do that is to do that through an SMC rather than making a proposal. Okay.
And I'm fine with that, but I just think we're missing. I've been surprised at the amount of advancement in this area and the fact that audit firms have been able to attest to its accuracy. And I think we're just missing that dialogue. Again, we may come back to the same point, and I'm fine with it, but I'm saying it is a CP after all.
Okay. All right, we note that in terms of the SMC. Evie, Adrienne, Lindy, and Bernard.
Thanks, yeah. just a minor point, but it's with regards to the wording of 429 and 430. I don't understand why we focus so much on volume of water. Well, this appears in other paragraphs. Volume of water, okay, there's an issue with measurement, okay, but then we add comments on the possibility to provide in the presentation of some information for GPFR's sake. Volume of water is not always the critical criteria for assessing the service potential of a mass of water. In dams, I mean, the criteria that are economically appropriate are the flow rate of water, the height of the waterfall, etc., etc. It's not the volume. The volume doesn't mean much. So could we just get rid of volume of water? We seem to have a focus on the volume, but it's not always the way. In case we were able, I mean, the preparer was able to measure whatever he wants to measure, a large volume of water. I mean, the measurement would not always focus on the volume itself.
So over here, Jane, if we talked about physical information, that would probably address your concern. It's more general, and it's in the context of what's relevant.
Probably. Because you see, when we're talking of seas, okay, we can't measure the sea, okay, but we can measure the potential energy in the tide flow, for instance, for sea dams. So
Yeah, that's what I'm talking about in terms of the relevant physical context. So we're not just confine it to volumes, it's physical, it's relevant physical information, and that would fit your concern as well as the other context. Okay, go to Lindy and then Bernard.
Thanks. And it is on the measurement. I guess we probably do need to think about or acknowledge that there could be instances for dams and canals where there are bulk water purchases. So there could be purchases of water, and so there could be prices and how that may or may not impact on the recognition. But I do think there are, I don't know if we can just say it's not practical. I think we might want to just explore it a bit more. Thanks.
Okay, well, if you can take that forward in the task force, but again, I think it's in the consistency between issues and the physical issues related to the type of natural resource. Bernard.
Thanks, Chair. Actually, I wanted to reinforce Scott's point and your point at the same time, if that's possible, actually, because I think it is true that there is a lot of developments currently going on, and I mean, we haven't looked into all the measurement challenges in detail, so I think we shouldn't kind of preclude it too much. At the same time, I guess your point is absolutely right that we have to be very, very strong and very crisp on this is financial reporting, and there are qualitative characteristics we're going to care about, and which will be the ultimate threshold, right? So we are not doing sustainability reporting. But my concern actually is, I mean, I think it goes that the credibility issue goes both ways, to be honest. So the one credibility risk is really to say, so everybody's coming up with, some crude calculations, and they're going to end up in the balance sheet. But the other risk is actually really, missing the train, so to speak, at some of the developments, and looking like the odd one out, not really, taking it serious enough. If I might phrase it as frank. So I think there is a challenge in the CP, because I think if we are too strong, probably people might push us too hard back. And we have to kind of come back again and re-listen to what they might have to say, might have to add in terms of methodologies and developments. So maybe it makes sense to leave some room at least for people to come in with, very, and we should be precise that we want to have very detailed information on methodology and developments, which might add to the discussion. So we don't want to have general views in the sense that, yeah, of course it's valuable, of course it's part of the public benefit. So that's not going to helping us out, right? But we want to have really, if somebody has experience with the measurement of those challenges for the natural resources we are concerned with, I think we should give them some space, because I'm really concerned they might push us back quite hard on some of the issues because of the general trend the topic is taking. So I think both of those points really have a place. I'm just struggling a bit with the strategy on this.
Thanks, Bernard. I think you've given a good summary of the way forward there, because I think what you're asking for is not to slam the door entirely, but equally to stress that any measurement would have to meet the criteria of financial reporting, and therefore it's not just because I happen to feel like it. And I think then in terms of the question is what, in the context of the SMC, actually it has to be phrased very much in the context of what would meet the criteria for that in terms of financial reporting. There's of course a broader reporting aspect, and anybody can report anything they like in terms of broader information that's relevant and the physical information that Hervé Adrienne referred to. But there has to be a really clear threshold in terms of what could be recognised in the balance sheet. And that's, I think, what we need to maintain. So if we get that right balance, and then as to Ajiv's point, it's consistent across the three, then I think we get there in a way that actually squares all of the discussions that we've had and the reputational point. Okay. Thanks for that, everyone. I think that was a useful exchange. Okay, so Amon, move us on.
Share the screen. Okay. Then the last section is, I think we've already touched some of it on disclosures of water. And we, as the task force just clarified that we should, or proposed non-financial disclosures of volumes of water and of water in dams and canals, because they meet the definition of an asset, even though they are not measurable. And the task force also clarified that no presentation is necessary for water in seas, rivers, streams, and lakes, because they do not meet the definition of an asset. Once again, I'll pose this question to the board to see if they agree with the task force recommendations. Just stop sharing.
Thanks, someone. Open up for comments on that. Mike.
Thanks, Chair. So I'm just reflecting on the conversation just before this, and then the observation in one of those slides that we can't measure water in dams. I mean, I did some work with hydrologists a few years ago, and they do know how to measure the amount of water in dams. And so I think it's important we get the disclosures right here, because volumes can be worked out and can be disclosed, especially if we want to be accountable for the water we're not putting on the balance sheet.
Thanks, Mike. So I think we need to be, although I think consistent with Adrienne's point, I think we need to set that in the context of what's appropriate in accountability terms, in terms of the objectives, and that might well be volume, but there might be other factors depending on how it's used and so on. So we need to leave that, phrase that in a sufficiently general way that it links it to the objectives, I think. Okay. And also make sure that the conclusion is linked back then to the conceptual framework criteria. Okay, good. So, Amon, anything else on water?
Nothing else from my side, Chair, but just to say thanks to the board for their insights. And I think the instructions will allow us to take the chapter, working on the chapter forward as well.
Good, okay. So in terms of the final paper on this, is that you or is that Edwin?
Oh, that'll be Edwin.
Okay, thanks, Simon. Edwin, over to you.
Thanks, Ian. Just to confirm, did you want to do a page flip on the water chapter or leave that for the next round?
I think, well, are there any other comments any board member wants to raise on the drafting? Because I recognise there's going to be some changes from that previous discussion. So I think, Edwin, actually, if we can leave that till next time round, probably, and then we'll look at a much more final version.
Okay.
So take us into the final paper then.
So this last paper is really almost like a residual paper of the last few changes that are significant to the CP. So I'll go through these and then pause at each bullet to see if there's any feedback. The first one is we received a few questions from members offline who were asking about why we were looking at existence uncertainty separately from the definition of an asset. And that's because in the framework, it talks about existence uncertainty. We should consider the uncertainty over whether an item meets the definition of a resource, whether the item is controlled, and whether there's a past event. So the way we've approached this is we've actually followed chapter 6 in the framework, which talks about the definition of an asset first and then layers on existence uncertainty. So we've taken the same approach, and that we've also thought that separating the two factors in two different analyses would better isolate any problems or issues that we might have, and better highlight the reasons why we can and or cannot recognize a natural resource. So we've added that discussion to each of the chapters, so chapters 3, 4, and 5, and I've included the paragraph references there. So pause here to get any reactions from the board.
Thanks, Edwin, and I think that's obviously a good discussion that's been had in the task force there that you've actioned. Any thoughts on the approach that's been taken? No, I think we're content with the approach you've taken then.
Okay.
Edwin?
The next issue is we received a question over general uncertainties over subsoil resources and whether it contributes to existence uncertainty or measurement uncertainty. And we've discussed this at the task force and come to the conclusion that it really contributes to both types of uncertainties. And that's because in terms of not knowing what's in the ground for subsoil resources, that contributes to the amount of subsoil resources that's actually there. But it also contributes to existence uncertainty because there's also questions around whether it's feasible to extract or to use the resources. So that would factor into whether the resources are, or whether the subsoil items are actually resources which meet the which can meet the definition of an asset. Because if we come to the conclusion that it's not really feasible to extract or use these resources, then that would not even meet the definition of an asset to begin with. So it wouldn't even go to the measurement question. And that is discussed in paragraph 3.33 and 3.4 and also in 3.9. Okay, so I'll stop there to get any reactions.
7. Comments? No, I think we're okay with that.
Okay.
So it takes us to the final bit.
Okay. The final point is really, I would say more editorial, but so what happened is we reworked the appendices into tables, which were comparing IFRS with other national standards and also with international statistical standards. And you'll notice that in the tables, it's really comparing financial reporting guidance. And one of the points that was raised by one of the staff is, well, the international statistical guidance includes guidance on environmental assets. So those are, I guess, assets where you only report the quantities, but you do not actually assign a monetary value to these assets. So we thought that if we leave that out of the tables, it would almost be misleading because it would kind of leave out half the framework, if you will, of the international statistical standards. So what we've decided to do is in the table, we've in the header explain that this is only a part of the international statistical guidance. There's actually more that relates to reporting of environmental assets, and we've left that in Appendix F. So now in terms of the appendix, we have the tables comparing the frameworks for subsoil resources, water and living resources. And then after that, we have a separate appendix that talks about international statistical standards broadly. So just want to get reactions from the board to see if they agree with that approach.
Thanks, Edwin. Any comments on that approach? No. So I think we're good with that.
Yeah. So that was the rest of the papers, but I was just wondering if we wanted to do a page flip on chapter 3, subsoil resources, because we haven't looked at that in a while.
I mean, I think the question is actually, are there any points that members want to bring up on chapter 3? Because I think, you know, if there are any drafting points, clearly you can, those can be, you know, on any of the chapters, those can be sent through to staff, because we're going to have a further look at this in the December meeting. And again, it's sort of shaking down together. And I think, you know, as Ajit pointed out, and a number of the other interventions have pointed out, it's now our opportunity to look across this as the drafting has actually settled down. And there probably are some changes we'll need to make to framing of the arguments and so on, responding to discussions yesterday. But if there are any comments on, you know, any points of principle on chapter 3, I'm happy to take those now. Okay. So I think that's good. So anything else you need from us now, Edwin?
No, we're good.
Okay.
Thank you.
So I think, you know, thank you to you and Amon for, you know, the significant progress I think that's been made. Particularly, I thought, you know, we had a very good first discussion on the presentation issues yesterday. That brought out a lot of good points. I think also, Lindy, thank you to you and the other task force members for the, you know, I know a lot of work has gone into this, and I think it shows, you know, in the way that you thought about the issues and those refinements that have come through, for example, in that final paper. So thank you very much to everyone for all the time you've put into it. I think it is really shaping up well. And I think, you know, the other thing which has come out is I think we're now much clearer about where the areas of tension are, where the concerns are from members. And that was certainly, I think, what we needed to do at this session was to sort of work those through. So thank you, everyone. I think that puts us in a good place to have a proper read through the entire document and have a look at the preliminary views and how those build up, and the SMCs, which should really now, I think, be the focus for the December discussion as we settle it down. So good work. So I think with that, we move into the retirement benefit plans item, and that's over to you, Jo.
Thanks, Chair. I've just had a heart attack. Zoom just failed on me. I couldn't hear anything. I'm back in now, but if anything happens, Dave will take over. So this session is intended to finalise the last 4 issues that were identified in the project brief in March 2021. We're also going to discuss some of the definitions and also to give the board a look at the first look at the draft exposure draft for retirement benefit plans. So if we move on to the first.
Oh, just before you go into the first issue, Jo, David, as task force chair, any observations you want to make before we get into the item?
Yes, thank you, Chair. I mean, first of all, I'd like to thank, obviously, the task force. The membership is noted on the first page of the papers. In particular, of course, Carl Ludwig Sol from the UN, who has dialed in today, who actually is finance director for the UN pension scheme. So some of his insights have been particularly valuable. So I think I would like to make a special thank you to him. I think I would just like to remind the board that what we're looking at here is retirement benefit plans in the public sector. And in particular, we're looking at retirement benefit plans that are offered to public sector employees as part of their reward package, i.e. you work, we pay you, but then when you retire, we give you a pension. Now, it is also, I think, important to remember that the form of the retirement benefit plans varies enormously across different jurisdictions and in international organizations that adopt IPSAS. Some jurisdictions offer defined contribution plans where there is a pot of investments, if you like, that will fund the future pension obligations. Other jurisdictions do not have any such thing, and the future pension payments will be paid out of general taxation as those pension payments fall due. So there's a huge range of arrangements. Some of them will be backed by legislation, some of them won't be, and some jurisdictions have a requirement for the pension schemes to be regulated. I mean, Canada is an example, I believe. Other jurisdictions, there will not be any requirement for the pension plan to be regulated. So there's an awful lot of variations, what I called at the task force meetings, a lot of wrinkles that we cannot legislate for when we're drafting a standard. So in that vein, I would ask that board members remember that we're not just looking at one type of retirement benefit plan, but a whole range that we need to cater for it in an eventual IPSAS, adapted, not aligned, adapted from IAS 26. Thank you.
Thanks, David. And I think just to extend the board's thanks again to the members of the task force, I think it has worked extremely well in terms of getting that expertise and experience of different jurisdictions, as well as particularly the UN system into our discussions. I think you can see that comes through very strongly in the papers. So thanks everyone, to the task force members and also the members of the staff supporting them. Jo, over to you.
Yeah, thanks, David. That was a great introduction. So, as I said, yes, so we're going to move straight into agenda item 7.2.1. And this agenda item addresses the measurement of the actuarial present value of promised retirement benefits. Now, this is a measurement of the total obligation owed by a retirement benefit plan to participants of that plan. And it represents what is expected to be the amount required to settle those obligations when participants either retire or leave the plan. IAS 26 allows this obligation to be calculated using either current salaries or projected salaries. And this choice, this option, has been cited as one of the criticisms of IAS 26, because using current salaries may undervalue the obligation that is actually owed. Further, using current salaries provides a measurement that is only relevant at reporting date and not at a time when those benefits will be paid to participants. It doesn't take into account that variable of the increases in salaries. The staff and task force recommend removing the option to use current salaries. So therefore, this measurement would be required to use projected salaries. And the reason for this is it's consistent with IPSAS 39, employee benefits, which requires a defined benefit obligation to be calculated using projected salaries. It's consistent with approaches taken by other standard setters, and it provides a better estimation for the full obligation. So I will pass that to the board for any comments and ask them whether if they disagree with this recommendation, to let me know.
Thanks, Jo. Open up for comments on that, members. Yeah, Mark.
First of all, thank you for the paper. I think it's written well and easy understandable given the technical complex, well, not quite complex topic. I agree with the recommendation. Also, the arguments laid out in paragraph 7, I think I would agree. However, what I do not see is where the public sector reason is, because I think these reasons also apply to private sector schemes. And this leads me to more of a rules of the road question, because we have in the past when we had alignment projects, we said, okay, we had discussions about whether we find some paragraphs in ISB literature useful or not, but then it was said, well, it's not a public sector reason, so we should not amend it. And that's why I raise it, because I think it's important. There are two steps in my view. The first is, do we agree with all what's the conclusions in the ISB literature? And then the second step, is there a public, even if we agree, is there a public sector reason why we need to amend? And I think it's important that we always know about what step are we talking about. And in this case, I think it's not the step public sector reason, because it's more, actually we disagree with the ISB literature here. We should to make it optional. But from the nevertheless, I agree to the recommendation of what has to be changed.
Thanks, Mark. And I think, you know, you're right. We need to be very clear about our reasoning here, because we do have some problems with the underlying standard, and in a sense also that's why we've gone the adaptation route rather than alignment, pure alignment. Ross, on that.
Yeah, Ian, I think you just said what I wanted to say in terms of this, just to remind the board that when the board committed to do this project, it didn't commit to do an alignment project. It said because of some of the views of members when we took this project on, we would do it as an adaptation. So we wouldn't constrain ourselves strictly to the rules of the road process because of the age of IS 26 and the fact that it hasn't been revisited because of the pension developments from IS 19. So the board gave itself that latitude. So I wouldn't see this as a strict rules of the road. And I think if the board has decided to remove an option, it doesn't have to justify it for public sector reasons in this specific project.
Thanks, Ross. And probably in this case, the points that Jo made in her introduction about the superior method and the consistency with IPSAS 39 would be telling points. And you know, it's not that we're not in alignment with IS 26, it's actually that we're removing an option in IS 26. So again, we need to be, for those reasons, I think we need to be quite precise about how we describe it in the basis for conclusions. Bernard, then Lindy.
Thanks, Chair. I don't disagree with the recommendation. I can see the rationale. I was a bit surprised though, because you know, sometimes we do have a debate around the accounting maturity of our constituents. So usually we also talk about how to ease them into accounting and how to kind of give them an option which might not be as much of a challenge. So I was just a bit surprised, because given our broad range of stakeholders, some of them, you know, might benefit from the option to have a kind of more simplified but not as accurate option of accounting. But again, this is not to kind of I would go forward the recommendation. I see the rationale. I was just, you know, kind of a bit surprised about our strictness, our strong approach in that regard.
Thanks, Bernard. So take Lindy's comment and then go back to staff on that.
Thank you. So I support staff recommendation. I was just wondering if we would consider adding some application guidance on how on the measurement and how it should be done. I don't think it is currently in the standard, and you know, you would want to probably give some direction to the actuaries as well on what they should consider, etc., and not just have nothing in there. Maybe something from the other standards could be useful. Thanks.
Thanks, Lindy. Mike, and then I'm going back to staff.
Yeah, thank you, Chair. It's just responding to Lindy's point. We had, and I was going to raise this under a later agenda item. We had a long discussion about, do we even include the word actuary in here? Why don't we just talk about present value? And if you just refer to present value, then the conversation about what does that mean gets simpler. I hear what Lindy's saying, and maybe we want some guidance on how, but we don't want to tell actuaries how to do their work, and I'm not sure we need to refer to actuaries at all. So as I say, I was going to raise that later, but and I will do so again later. But so I'm not sure we need that guidance. We've got enough guidance around how to work out present value, I think.
Thanks, Mike. Are you on that, Renee, as well?
Yes, I am. Just to reflect on Mindy's comment, there's probably guidance if we deemed it necessary in that case in IPSAS 39. So because that in principle, that's what we're adopting here. We're adopting this in the similar approach as it relates to projected salary increases. So maybe we can borrow or point to IPSAS 39.
Joe or David, back to you on that. And David, you might want to comment as well, given the approach we're taking on ED 77 in terms of reliance on valuers as well. I think that's another sort of, if you like, point of comparison. Joe, first.
Yeah, so I take Lindy's point, but I suppose I'd be a little bit reluctant to try and tell actuaries how to do their job. But we can definitely look for some guidance in IPSAS 39, as Renee suggested, and to see if there's anything in there. Responding to Bernard's point about the maturity of our adopters, if they're applying IPSAS 39 where they need to use projected salaries already, then this is just the other side. So there shouldn't be any, I don't consider there should be a problem with them applying using projected salaries. And back to Mark, about what's the public sector reason, I agree with Ian that we are still aligned with IS 26. We've just removed an option. So we haven't actually changed what the requirements of IS 26 is. We've just removed that option for current salaries to then be consistent with what's in our current literature.
Thanks, Joe. David, anything you want to add from the ED 77 perspective or anything else?
Well, I mean, I can see there is a read across, but I think there is some difference because the accountant needs to understand the valuer's report when you're looking at ED 77 measurement, because it has got implications for future accounting decisions. For example, if you need to de-recognize a component of an asset. I think, like Joe and Mike, I would be reluctant to try in this standard to tell an accountant what the actuary is going to do, because the actuary in this case will be essentially told, well, the standard requires us to value the future obligations using projected salaries, and the actuary will go away and do it. So I think Joe's right. I mean, there might be something that we could add in there taken from IPSAS 39, but I think I would ask that members leave it to the task force and staff to consider the best way to do it.
Thanks, David. So I think that's the decision is that we go with the staff recommendation. I think the instruction is as you've outlined there, and I think also just to revisit the drafting to make sure that we're absolutely clear on our reasoning in line with the discussion around Mark's intervention. Okay.
Okay. So,
thanks. I do agree. So my comment just came from, we have this resistance to IPSAS 39, and if we want this to be a standalone document, we should make sure that if an accountant picks it up and applies it, they understand what they need to do. And so if we need to take stuff from IPSAS 39 and put it there so that it can be used, that's just my caution. We want that one to be able to stand on its own and be fully adhered to without having any doubts on the application. Thanks. Because I don't think they will go to 39.
Ian, might I come back on that?
Yeah, sure.
I think maybe it's worth making the point that this standard is the retirement benefit plan. IPSAS 39 is the employer. So the accountants will probably be different people, is my guess. And I agree with Lindy that this standard needs to be being capable of being read as standalone, but you're talking about the finance director of a retirement benefit plan and not the finance director of the employer. So I think we've got to remember the perspective from which it's being written, which is why I reiterate the plea, just can you leave it to staff and the task force to think the best way to go about this would be. I mean, Renee's always been strong on the point that we need to make sure that whatever we do in this one isn't unnecessarily inconsistent with IPSAS 39. I mean, there are going to be occasions where, because of the different perspective, we're going to be looking at different things. So we'll take the comments into consideration as we go through the final drafting.
Thanks, David. And I think, consistent with the discussion that we've had, I think the basis for conclusions, then needs to give that explanation in the round in terms of how we thought our way through this. Good. Okay. Thanks for that. So then move us on to the next item, Jo.
Okay. So the next agenda item is agenda item 7.2.2, and this item addresses how plan assets should be valued. Now, I found IAS 26 somewhat confusing about how plan assets should be valued. So in paragraph 32 of IAS 26, it starts off by saying that retirement benefit estimates should be carried at fair value. That's fine. However, this paragraph concludes by saying that for investments where an estimate of fair value is not possible, that reason should be disclosed. And then in paragraph 33, towards the end, it states that investments carried at amounts other than market value or fair value, the fair value needs to be disclosed. So this is confusing, because if the fair value cannot be estimated, how is it actually possible to disclose that fair value? So staff and task force recommend removing the text that gives this implied option that you could measure your plan investments at an amount other than fair value. And the reasons for this is that it's consistent with IPSAS 39, again, where plan assets are to be measured at fair value. For me, I think it's consistent with the intention of IAS 26. Assets held for financial capacity should be measured at current value, as discussed in ED 77. And a plan asset is instrumental in determining the funding level of a retirement benefit plan. So therefore, it needs to probably be the most accurate measurement at that date, at reporting date, so that users can see whether the plans are funded, overfunded. So that's why we're recommending just basically saying that plan assets should be valued at fair value, and that's it, and say no more.
Thanks, Jo. Comments from members on that recommendation? No, I think we're happy with that. Just one thing we might pick up in explaining that, I think probably consistency with IPSAS 39 isn't the lead argument on that. I mean, it's certainly good to have that, but I think it's the other arguments probably are stronger and more persuasive from an external user point of view, given that this is about retirement benefit plans loosely.
Yeah, thank you, Chair. I agree with the staff and task force recommendation that the plan assets be measured at fair value. However, I suggest the inclusion of additional discussion in the ED that the fair value shall be used for all types of assets acquired as plan assets, and on specific instances that there are types of assets which can be planned assets, but measured using a model other than fair value. I also agree with the recommendation that an SMC be included in the ED, because there might be other jurisdictions or instances that the fair value cannot be obtained, or estimate is not possible, even after taking into consideration the different measurement techniques. But there might be difficulties or challenges in determining the fair value of the plan asset, especially in some investments like land, where there may be no known market value, like in our jurisdiction, not always that there is a known market value, and only zonal valuation values are available, and of course these are significantly lower and there is also a challenge on possibly hiring professionals to value the asset, and the cost of hiring professionals may be a big cut in the budget of the retirement benefit plan. Okay, but nonetheless, in my opinion, it might be appropriate to refer to the fair value principles in IFRS 13 and the proposed CD 77 and maybe allow for different measurement techniques when estimating fair value, and allow an entity to use a hierarchy of inputs which extend beyond just market inputs. Thank you, Chair.
Thanks, Lucy. So I think probably the instruction to staff there is to make sure we're explicit about, we're proposing fair value as the evaluation basis, but the techniques would then be selected in accordance with the guidance that is in IFRS 13 that we're proposing to bring into either ED 77 or I guess it's ED 77, possibly financial instruments as well. Joe or David, anything else to add to that?
No, I think that's a good suggestion. We'll add that into the application guidance that addresses how to measure fair value. How to value the plan assets at fair value.
Right. Okay. So Mike and Lindy.
Thanks, Chair. I wanted to just pick up on Lucy's point about SMCs. Remind me, David, I think wherever we sort of in the task force, we said anywhere we decided to take an option away or to vary from IAS 26, even though it's an adaptation project, there should be an SMC.
Yes, I mean, we came to that sort of tentative conclusion subject to the board's agreement, didn't we? That if we are going to remove options, that we would raise it as a question. But that's subject to the board.
Sorry, thanks, Mike, for bringing that up. I think, it certainly sounds a reasonable suggestion from, stakeholder points of view to draw their attention to where we've removed the choice so that we do specifically get a mandate either way when we finalise the standard. That certainly seems to fit from a public interest perspective. Any members not content if we take that approach? Obviously, there'll be quite a few SMCs as a result of that, but that's a consequence of the issues with the underlying standard. Okay, good. So I think that's the instruction to staff that we would include an SMC for each wherever there is a choice that we're proposing to remove in the ED. Lindy.
Yes, I guess I just didn't know what would we, there's no other option but to fair value. So I guess it's what the question will be, because if they say, well, we don't agree with you taking off the taking out the to disclose where you can't. I think we do want to, and I think there is guidance on how to measure fit. So I agree with the principle. I just wonder, you know, if there is anything that we would do if they say, well, we want to retain IAS 26, because I think there is sufficient guidance to get to a fair value.
Ross, do you want to pick that one up?
I don't have a solution for that, but I just wanted to highlight that my agreement, I think, with Lindy's point, that if you think about what we're talking about entities that manage and operate retirement benefit plans to make sure they've got future payments to their members. And I would think I'd be a little concerned if a large portion of their plan assets are unable to be valued. So I think as per Joe's paper, she shows that most jurisdictions are requiring fair value at a national level. And I would think if there are issues finding underlying values on a fair value basis for the assets being held as plan assets, then I think that's a bigger issue. So I'm not sure this is something we can fix in an accounting standard. I think maybe a BC speaking to the PFM angle on that might be helpful, in that we think if you're holding them as plan assets, you should have a method for valuing them on a fair value basis. Again, these aren't operational assets. They're assets being held to fund future pension payments to the plan members in a pension plan where its sole purpose is managing and operating the pension plan. So I think we should be careful not to go too deep into this and try and give alternative measurement techniques, because fair value is the best way to value these assets. And if you're operating a pension fund, I think your fiduciary duty is you know how to value them.
So I think it goes back to the proposition here is that it is fair value is the basis. Our view is that the techniques point is adequately dealt with through ED 77 and or IPSASB 41, and we leave staff to go away and research quite what the reference should be on that. I think to Lindy's point, we would always ask for, if you disagree, why. So I think we're putting the ball back into, if we express that view, I think then the challenge goes back to constituents to explain why there is insufficient guidance in that other literature, bearing in mind that overall why you holding the assets in the first place point. So if we can have that as the way forward. Okay, good. Thanks for that. So then moves on to the next item, Joe.
Okay. So the next agenda item is 7.2.3, and this item addresses the presentation of the actuarial present value of promised retirement benefits. So this relates back to 7.2.1, where we were talking about the valuation of that obligation. So at the moment, IAS 26 allows this value to be presented in three ways, either on the face of the financial statements, as a note to the financial statements, or in a separate actuarial report. Having these options is another criticism of IAS 26, because this information is arguably one of the most important pieces of information, because it indicates the obligation to participants of a retirement benefit plan. And if a plan is unfunded, it is likely that that amount will be funded by the government. So therefore, this is a key piece of information, and it was one of the main reasons for doing this project. So staff and task force recommend removing the second and third options and require that the actuarial present value of the promised retirement benefits is displayed on the face of the financial statements, and it should be on the face of the statement of financial position. And the reason for this decision is that, as I said, the key factor of undertaking this project was to increase the transparency and accountability for government retirement benefit plans. And if a key obligation is not front and centre of the financial statements, then staff don't think this objective is met. So I open up to the board whether they disagree with this recommendation.
Thanks for that introduction there, Joe. And I think that probably, is a clear, actually is probably a slight departure from the reasoning we talked through with Mark, that there is a very clear public sector rationale for doing this because of circumstances prevalent in the public sector. We need to make that clear. Anybody want to comment on that proposed approach? Todd.
I'll just point out that I don't think you can produce a meaningful statement of financial position without it.
Excellent, thank you, Todd. Okay, good. I think we're all behind that one. Thank you, Joe. So take us into the next item.
So the next paper is agenda item 7.2.4, and this is the classification of contributions and benefits. And this item addresses how contributions and benefits should be classified. That is, what type of conceptual framework elements should they be? This issue was raised when developing the project brief because there are differing opinions on how they should be classified. For example, should contributions be classified as revenue, liability, equity, or contributions to owners? IAS 26 is silent on what label should be given to these to contributions and benefits, but it does require that they are presented in the financial statement. So the line item would say contributions received, benefits paid. A key factor to remember for this IPSASB is that it needs to be flexible for all different retirement benefit plans, and each plan maybe have different requirements and regulations, and that goes back to David's introduction at the beginning, that we can't account for every type of different wrinkle that is in all these plans. There's going to be a myriad of variations. So staff and task force recommend staying silent on what type of element contributions benefits are. We think it's most important is that the information is provided and is presented in the financial statements. But what we intend to do is provide some different illustrative examples to show how different financial statements may look depending on whether the retirement benefit plan considers the contributions to be revenue or whether they consider the contributions to be a liability. I'm not certain whether we need to ask an SMC on this because it's not a departure from IAS 26. David, did you want to add anything more to this?
Thank you, Joe. I don't think so. I think you've picked up on the point that, that as I said before, there are lots of wrinkles. I know when we discussed it initially, we thought, well, if it's a defined contribution scheme, then the answer is easy, but actually it isn't, because it depends on the rules and regulations around that defined contribution scheme. So, for example, if Joe pays into a defined contribution scheme, 100% of her contributions might go into the pot of investments, but it might not. 90% might go in and 10% might be used to cover admin charges, or 100% might go in and then some is taken out of the overall investment pot to pay for the charges. There are so many different arrangements just for a defined contribution scheme, and when it gets to defined benefit schemes or even hybrid schemes, and there are hybrid schemes, it gets even more difficult. So as a task force, we came to the conclusion that although IAS 26 might be criticised for not being a little bit more directional on how to treat contributions or benefits, actually, it's probably the right answer, and let's leave it to the judgment of preparers in the context of their own scheme regulations, their own jurisdiction, to determine how they should be presented. And as Joe says, they will be presented, but where they're presented would depend on the circumstances. Thanks.
Thanks, David and Joe, for the introduction. So open up for discussion amongst members. Yeah, so I've got Patricia and then Todd and then Mark.
Thank you. My question is not about I agree with the recommendation, but I could understand the text, the requirement in the ED, because in examples in the in appendices, because the main information is if the assets of plants is sufficient to pay the obligation of the plants. Because the assets is the net assets are defined as the assets of a plan less liabilities other than the actuarial present value of promised retirement benefits. When the possibility to contributions and benefits impact or not on net assets, I think it's regardless of the classification as liability increase, decrease of liabilities, or revenue or expenses. In other words, in my view, the contributions always increase the amount of the net assets, and benefits always decrease the amount of the net assets. The difference is in relation to the other side, the side of the liabilities and the side of the super after the net financial position, but not in the relation. They present the information about the net assets of the plan. I could understand the rationale here. I agree with the possibility, the options to recognize less decrease liability or revenue and expense, but I didn't understand the consequences in the EG. Thank you.
Okay, thanks, Patricia. I mean, it sounds like there's a few things there to work through in terms of examples and explaining that. I don't know, Joe or David, are there any immediate responses you want to give to that, or is it something that needs working through offline?
I think, because I don't understand Patricia's problem, so I think we'll need to take it forward offline, if you don't mind. Thank you.
Okay, if you're content with that, I think that's probably the best way. So then I've got Todd, Mark, and Mike.
Thanks, Ian. And yeah, I'm not 100% sure myself about Patricia's issue, but it might be a little bit similar to mine. And because Patricia sort of talked about the appendices, and it was when I looked in Appendix D and saw that we were proposing two different ways of presenting things that made me sort of think about this recommendation. And I'm just a bit concerned that we might need something within either the exposure draft itself or in BC somewhere that supports why we're actually presenting two different ways of dealing with primary statements here. So I understand the issues here, you know, that there are differences of views about whether you should be recognising contributions and benefits as revenue and expenses or as increases or decreases in liabilities. But it feels to me like we have to deal with it at some level to make sense of why we've got different ways of presenting it in the examples that we're going to add to the exposure draft. So I don't 100% agree with the recommendation, because I think there is something that we have to do here to bridge that gap for our constituents.
Okay, thanks, Todd. So I'll take comments from, and I see support from Lindy on that. Can I just take comments from Mark and Mike before going back to staff?
It has been said previously that there is a wide range of different schemes. However, I think in many cases the schemes are not just acting on behalf of an employer or employees. So you get flows in, and then you have corresponding increase in liability. I mean, in many cases, the scheme itself is an institutional unit and really has the power to change the level of benefits of case of underfunding, which means it can change the conversion rates. This is then actually a real revenue because you reduce the liability, but you don't have a reduction in asset. Or you can also demand for additional contributions by the employees to fund the deficit, which increases your assets, but there is no increase in liability. And therefore, I think in this case, we have a real revenue for the fund. And it's not just, so I definitely think that in this case, a statement of performance should be needed. And what I struggle a little bit that in such cases, an entity could still apply the IPSAS and say, no, we choose not to have such a statement. So I would rather suggest going like a way to say statement of performance is required unless there is evidence or there can be shown that this is not required and you can opt it out. Otherwise, I also see a little bit a risk that there is not enough faithful representation because the scheme actually has revenues and expenses not on behalf of others, but incurring it by itself.
Ross, did you want to comment on that before I go back to Joe or David?
And just a quick point directly to Mark's point is I agree with what he's saying, but I think what gets missed in that is there's two types of plans that are covered in these types of schemes. There's defined contribution and defined benefit. So what you just said, I think applies to defined benefits, but wouldn't work for defined contributions in some jurisdictions, which is what I think the task force was looking at, is that you need to have that flexibility. And the other point I think needs to be noted is the preparer might choose an approach, but they will still need to agree it with their auditors and that it still faithfully represents the transaction. So I think it's a principled approach that's being put forward. And I think we need to capture that in the BCs, in addition to some clarification needed. But I think we should be a little bit careful about being too prescriptive here because the number of permutations of these types of plans, their legal structures, is very, very challenging to nail down in a prescriptive way, which is why I think the task force has taken the option of leaving it more open.
Thanks, Ross. Mike?
Yeah, I just wanted to support Ross there. I think we had a good chat about this at the task force, and it is tricky. We didn't want to have two options or more options, but we wanted to have one. And then in the end, we concluded we simply had to allow an option here. We did resolve as a board, I think back in June, we wouldn't have a statement of financial performance as part of the suite. So I'm not sure I want to reopen that, Mark. I hear what you say. And I think the other thing, just picking up on Patricia's point, we sort of did the two examples, in my own words, a bit of a rush at the end, and I think they need work. So even reading through them again today, I've got some suggestions to make to Joe, which I'll take offline. But I think that's something, David, we just need to have another look at, because I think the clarity around what is the amount of the unfunded liability, if there is one, isn't coming through for me, and the movements in the valuations isn't coming through for me either, what's causing them. So I just want to have another look at those, Ian.
Thanks, Mike. So what I'm hearing is I think members understand the nature of the problem. I think I'm hearing that we do need to provide something more that would help preparers think through the issue and discuss it with their auditors. So it probably is around something like the kinds of factors that should be considered, which I think would sort of perhaps formalize some of the discussion that we've had about the multiplicity of schemes, nature of funding and things like that. And then I think there probably is a kind of question, which is where should that discussion actually sit? Is it something that actually there should be something perhaps in, I don't know, the application guidance saying that those need to be considered, supporting the, which is something to hang the implementation guidance off. So I think that's probably the sort of thing that we're looking for. Lindy, anything else to add before I go back to staff on that?
Thanks, Chair. I was also going to suggest something like that, and maybe you have a defined contribution scheme and a defined benefit scheme. Alternatively, I was going to say, at least to then the appendices, you can add a fact pattern to the top that kind of describes the entity and then illustrates the disclosure, because that could also then assist. But I support the application guidance. Thanks.
Okay. Mark, you want to come back in? I'd rather actually at this stage go back to staff and just let them reflect on the discussion, if you don't mind, and then you can react back on that. Joe, David, just reactions to where we've got to.
Yeah, if I might, Joe, come in first. I mean, looking at the clean version of the prototype draft ED, I think the section, well, picking up on your point and Lindy's point, I think some application guidance associated with the section on presentation and disclosure, which would then, as Todd puts, build the bridge between the authoritative text and the IGs and examples. Picking up on Lindy's point, I mean, we do want to put in more examples because this is quite an important part. If any board member has got a fact pattern or an example, so it's real life rather than us making something up that bears no resemblance to reality. If you've got something that is real life that we can anonymize to use as an IGIE, could you please send it into staff? You don't need to anonymize it, we can anonymize it, but if you could, I mean, I think that would be extremely useful for users of the eventual IPSASB. Thank you.
Thanks. Mark, go back to you at the moment.
I think your proposal is a way forward to provide indicators and to say so that there is at least clearness that if there are like revenues, I explained by the scheme itself that maybe a statement of performance would be more appropriate, be that with examples, be that in a written text. Yes, and just concerning the defined contribution schemes, I mean, it's very strict. You can fall out very quickly out of this category and be in the defined benefit scheme. So, but again, this is a point of there's a big variety, and it's clear for me that the pure contribution scheme there is maybe no need to provide a statement of performance.
Okay. Thanks, Mark. That's helpful. So I think that's been a good discussion. Obviously, I think therefore we've said we need some guidance somewhere. David's given us a suggestion. Obviously, if any member has any different suggestions, perhaps to discuss that offline. But we need to have that discussion fairly soon to allow staff and task force to work that up. Also, the request in terms of examples of fact patterns that we could use to provide additional examples here would be much appreciated. And then there's also that piece of work just to work through offline with Patricia in terms of the questions that she was raising and the potential impact on those examples. Okay, Renee.
Yes, thank you. So am I understanding that we're going to go back and reassess the statements that a pension plan is required to present? Back to Mark's point about reconsidering a statement of performance?
No, I don't think. I think you said you dropped that suggestion. I think that's right, isn't it?
Yes, yes.
Yeah.
I thought that was a prior decision of the board that we would go with the statements that we've we've outlined at the last meeting.
Yeah, I think that's where we got to. Okay. Good, right, well, thanks everyone. I think that was always going to be an interesting discussion, bearing in mind previous experiences on that and the challenges associated with the multiplicity of schemes. I suggest at that point, we take a break. So if we can break until 22 the hour or 40 minutes past, however you describe it. So David, if you can keep time for us as ever on that, and see everyone back in just over 10 minutes.
1 minute.
Great, everyone. Thanks very much for being back promptly. So I think over to you, Joe, for the next item.
Thanks, Chair. So the next item is agenda item 7.2.5. Part of the process in adapting an IFRS or IS26 to an IPSAS is that staff will review the definitions to determine if there are any terms that are already defined in the current suite of IPSAS. So we identified two such terms which are already defined in IPSAS 39, and they are defined benefit plan and defined contribution plan. And we also noted that the term defined benefit obligation in IPSAS 39 is very similar to, the concept is very similar to the actuarial present value of promised retirement benefits in IS 26. So staff and task force considered whether we should use the IPSAS 39 definitions in IS 26, but determined that for the purposes of this project, the definitions in IS 26 should be retained because, well, firstly, there's no public sector reason to change them. The definitions in IS 26 are written from the perspective of the retirement benefit plan, whereas the definitions in IPSAS 39 are written from the perspective of the entity providing benefits to employees. And we did have some advice from an actuary that there's a slight difference between the meaning of the actual present value of promised retirement benefits and the present value of a defined benefit obligation. So the recommendation is not to change any definition, stick with what's in IS 26, and open it up to the board for if they agree or disagree with this recommendation.
Thanks, Joe. David, anything you want to add before I open it for board members?
No, thank you, Chair. Just to re-emphasise the point that we're talking about a retirement benefit plan.
Okay, so thanks for those words. So I've got Adrienne first.
Thank you, Ian. My first concern about definition is that in IS 39, the definition for defined benefit plans does not explicitly state that those schemes, those pay-as-you-go schemes, are excluded from the definition. So for some constituents, and as you may know, in France, we have that issue. We have pay-as-you-go schemes for, the whole population of civil servants. We have some funded schemes, but usually, all the schemes are unfunded and pay-as-you-go. So it should be clear that those pay-as-you-go schemes are excluded from the intent of the future IPSAS standard.
So I'll take the mic and then go back to staff.
Thanks, Chair. And I did mention to David and Joe that I would raise this as a member of the task force. I don't want to go back on what I might have agreed at the task force meeting. So I did agree with the use of the definitions from IAS 26. So no problem with that, but it was the discussion we had at the task force around the use of the word actuarial. And if I'm on my own, I'll keep quiet, but I just keep saying to myself, why do we need to use this word actuarial when all we're talking about is present value of the expected future payments and other factors that come into play here? So I'm still uncomfortable with including the word actuarial. I think we just need to refer to present value. And I wonder then, Joe, whether it's in paragraph 10 below the table of definitions where you try to explain why 39 wasn't relevant. And I got confused with that conversation because none of this is about certainty. It's all about present value. It's all about using future payments, whatever, to try and come up with a value. So I got confused, and that then got me confused with BC70. And I don't know what BC7 is trying to say. Maybe it's a task force thing I've just got to go back to.
Okay, so thanks, Mike. So I think perhaps in sort of taking the discussion, perhaps we ought to just focus on the sort of the two where we've definitely got a difference between IAS 26 and IPSAS 39, which is the defined benefit plans and defined contribution plans. And then we'll come back to your point, Mike, on the actuarial point separately, if that's okay. So could I take comments from Renee and Todd if they relate to that first thing in terms of defined benefit plans and defined contribution plans?
No, I'm sorry. I'm in for the next conversation. Thank you.
Okay, so if you don't mind coming back in on that one, Renee, that would be great. Okay, so Todd, you're in on the first one.
Yeah, no, I'm on defined benefit and contribution plans, and was just reflecting on the fact that the way that IPSAS 39 defines those two things, because defined benefit plans are sort of the anything that isn't the other one, it ensures that all plans will have a home in one or other, and IAS 26 has two separate definitions, and so defining them in that way, you could have plans that people read the definitions and think, oh, the standard doesn't cover my plan. I know there's the potential for that. It may not happen in reality, but I just wondered whether we should think about defining defined benefit plans as anything that doesn't meet the definition of a defined contribution plan in IAS 26. And I hear what Joe was saying, that, you know, right now, there isn't necessarily a good reason to depart from what's in IAS 26, but we have to remember this isn't an alignment project, it is an adaptation. So I think there is, we have got some room to make the change to the defined benefit plan definition so that we don't have a situation where someone says we're not in the standard.
Thanks, Todd. Renee, are you back in on this one then?
I am, in fact. Thank you, because it's an overarching reflection I'm having, actually, that would work, that would be relevant for all of them. IAS 26 is a very old standard, and IPSAS 39 is driven from the much more recent IFRS standard. So have we looked, and I'm a member of the task force and I'm asking, so I apologize, but have we considered whether maybe the differences we see are as a result of the advancement of standard setting by the IASB on the IPSAS 39 equivalent? And it's just that on the pension plan standard, it hasn't followed. And today we're looking at apples and oranges, but if there were good reasons for the standard setting to evolve the way it did on the sponsor's side, then maybe we want to review that and then catch that as we adapt ours. So that's kind of an overarching comment. Thank you.
Okay, so thanks for that. I mean, just sort of, I think a couple of points, and then I'll take it back to staff. I think, Adrienne, I think it probably would be good to have an offline discussion around the history on how we address the peculiarities of the pension plans in France, because originally in the IPSAS 26, the predecessor to IPSAS 39, we did try and address that, and actually the attempt that we had there failed, and actually we took that out in moving to IPSAS 39. But I think it would be good to have that discussion outside the meeting, you know, and Fabienne might well be able to help out with that, because it is a complex situation, and I think we know that it is very complex. So if we can take that conversation outside and then work out whether we need to, you know, how we deal with that, consistent with the discussion that we had previously on that. I'm wondering, and this is sort of off the cuff, but responding to the suggestions that Todd and Renee made in favour of picking up the IPSAS 39 definitions, I'm wondering whether there isn't a kind of middle way that actually we could use the sort of, you know, descriptions of the definitions in IS 26, whether we couldn't include that by way of sort of, you know, application guidance or something like that, or clarification, because I can understand the point that Todd makes, that the ISB very definitely tried to make sure they had a crisp definition of defined benefit, and then they defined contribution, and then defined benefit being the, you know, anything that wasn't, I got that the right way around, but you know, so I just wonder whether there's some mileage in that, because I think from a constituent point of view, there is this sort of concern every time we use a different term, unless there's a real reason, you know, that we inadvertently cause confusion. So I'm going to go back to David at that point for reactions, and then I know there are further comments to take on.
Okay, thank you, Ian. Picking up on your point first, I don't think we can use IPSAS 39 definitions as they are written. The defined contribution plans is written from the perspective of the employer, where it actually says, you know, it's where the employer won't have to make additional contributions, which is not relevant for the plan itself. The defined benefit plans are defined in 39 as post-employment plans. Now that could be anything. It could be health, it could be, all we're talking about are pensions. So I don't think we can use the definitions as they are, which is, I mean, just to give you a background, I don't think you knew this bit, but when we took the original paper to the task force, we had suggested that we did adopt the IPSAS 39 definitions, and the task force soon turned that one round, which is why you've got the paper as it is. I do understand Todd's point, because indeed there are hybrid schemes, and I think even the UK Principal Civil Service Pension Scheme at the moment has got hybrid elements in it, where it seems to be, for newer members, it's a defined contribution type scheme, but it's still referred to as a final salary scheme, which has got aspects of defined benefit. I wonder whether actually the way forward is to have the definitions that we've got for, as in IAS 26 for defined contribution and defined benefit, but then actually say something about what do you do if you've got a hybrid scheme. So i.e. where you've got bits. Todd's put his hand down, and I was hoping he was going to come back and say that's a jolly good idea, David, and I'll work with you to work it out.
If I can come back, I was never proposing
Yeah.
Yeah, I was never proposing picking up the IPSASB 39 definitions. So stick with the defined contribution plan definition as it is in IAS 26. Just change the defined benefit plan definition to be a retirement benefit plan other than a defined contribution plan or something along those lines.
But
so
can
that
I come back to you on that, Todd? I mean, what happens if you've got a genuine hybrid plan where some of it you could say is defined contribution and some of it is defined benefit? I mean, I was wondering whether you could bifurcate the two.
I think that there's some further thinking that's required on this one, although I can see the sort of option that you're putting forward, Todd, because that would be, would certainly address some of the concerns. So I'm going to go to Lindy and then to Thomas.
Thank you very much. And my suggestion is, wouldn't it be useful to have a liaison with the IASB staff just on some of the issues to say to them, well, knowing what you know now, what do you think you would do with this? Or, just engage with them on some of these things that we are struggling with, because they might, it might be useful to pick their brains on some of these things and maybe they have some ideas. I mean, if they have looked at it recently or not, but they might offer some assistance. Thanks.
Thanks, Lindy. I think that's a good suggestion. Thomas.
Yeah, thank you, Ian. Just two comments and building on what Renee just said and what you just said as well. First of all, just remind the board that one of the warnings of the CAG when talking about the mid-period work program review and IAS 26 being a project was that this is a very old standard. So I think it's really reasonable what Renee just said to kind of investigate whether something has developed in the meantime, which would kind of advocate for changing the definitions. And I think this is building on what you said. I think it's always a danger if we use the same word with different definitions from a user's perspective. I think it's addressed in the agenda paper. It may be confusing for users. I do see the perspective argument of David, but I probably think there could be a middle way, like Ian suggested, to at least try to use this similar wording when we talk about similar things. And this is, for instance, in the defined contribution plan definition of IPSASB 39, it is talking about fixed contributions which are paid. In IAS 26, it's talking about amounts to be paid. So I think at least there should be some recognition element where people recognize, okay, it's connected. It's not the same, I do understand that, but it's not necessarily using different words for the same thing.
Thank you, Thomas. So I think clearly, I think Lindy's point in terms of let's get as much context and history as we can from IASB staff clearly makes sense. It does seem to me that nobody's actually advocating for picking up precisely the definitions in IPSASB 39. I think there is a question about, which is the sort of point that I think Todd raised, but probably others have raised, which is, can there be some kind of hybrid approach, which might, for example, an approach picking up, perhaps the definition, of defined contribution plans and then going to the, I don't know, anyway. So I think there's a sort of, perhaps a sort of midway approach, which I think might be worth if perhaps Joe, Todd and David, perhaps if you could just have a go at seeing whether there's something that you think might work, might be possible on that, so that basically I think we come down to two options, and I think we probably have to bring those two options back to the board, which is the proposal that we have at the moment, which is that we go with different definitions and we acknowledge that and we explain that, and then we get constituent input on that in terms of if they have alternative suggestions, how would you do it? but I think there's that sort of midway option, if I can call it that, that probably should be worked up as an alternative. And then if we can come back with that next time round, I think, you know, at that stage, I probably would take a show of hands just to see which one members support going forwards. If that's reasonable way forward on that particular point. David, Joe, are you okay with that?
Yeah, I'm okay with that. I mean, Joe has reminded me that in IAS 26, hybrid schemes are accounted for in the same way as defined benefit plans. So I don't know what Todd thinks, but if we could actually put something in to make that clear, and then picking up on Thomas's point, you know, sort of change a couple of words, so at least we're reflecting the same wording in the proposed definitions where we mean the same thing, but still retaining that different perspective between the plan as a reporting entity as against the employer.
Yeah. Okay, that sounds like we're beginning to evolve a way forwards for that sort of third way, if I can call it that. Okay, so if that's the way forward on that one, can we just then go back to the discussion about actuarial present value, or the IPSAS 39 definition? And I know, so Mike, you questioned using the term actuarial. Renee, I know you wanted to come in on that. So if you want to come in at this point.
Yes, thank you. Thank you, Chair. So again, I'm starting from the premise that there may be good reasons why the standard setting has evolved on the IPSAS 39 side for the IASB's equivalent, and we may want to be curious about that. The other basic principle that we've used in Canada with our own Canadian pension plan standard is that in substance, the two obligations are the same. Whether you're an employer wanting to measure that obligation and record it as the sponsor, whether you're the plan, it's the same obligation. And that's one of the reasons why we have an expedient in our Canadian standard, as opposed to asking for another valuation and measurement to allow a pension plan to look to the sponsor's obligation and to use it as an expedient to prepare their plan's financial statements. So that tells me that the Canadian approach acknowledge that the substance of the obligation is the same. So using that reflection, I would want to be careful that we're using different terminology, or, well, first I would want the board to test that basic principle. I mean, it's been a Canadian one, but it doesn't mean it's the only one. So if we test that and if we support that, then try to align our definitions and meanings so that we don't create confusion. Thank you.
Thank you, Renee. Certainly listening to you talk there, I wondered whether, you know, one is a subset of the other or something like that, a more refined term or something. I don't know. Obviously, Joe, David, you have had actuarial advice, but I don't know. It sounds like perhaps we just need to take that a bit further before making the decision.
Yeah.
With Renee's suggestion.
So just to come back to Renee on that, I acknowledge that, yes, there is that expedient within the Canadian standard, but that would not work for multi-employer plans. If the employer is doing their defined benefit plan on a defined contribution basis, which is allowed in IPSAS 39. So, and I'm not an actuary. I don't profess to understand the subtle differences between the two. I have to take advice from the actuaries that we've got, but we can investigate that further.
If I can come back, come back on this, Chair, thank you. Yes, of course. So I agree with you. If there isn't a defined benefit obligation computed on the sponsor's side, whether at a multi-employer level or at an individual level, of course, there's nothing to look to. But if there is one, the principle is that looking to it would be it recognizes that the two are the same substance when it exists, of course. Thank you.
So in terms of going forwards, I think, you know, I can see the merit of having the different term if that's supported by professional advice. And then I think we would just need to be very precise in explaining why we've gone that route in the basis for conclusions. So if staff can go away with that, you know, the board really requires a bit further advice to determine, you know, whether that difference can be explained and substantiated based on that additional advice. And I think, Renee, if we could, if that does support that difference, then we would go with that IS26 term. Is that a reasonable way forwards?
Yes, of course. Thank you.
Okay, thanks. Lindy.
Yeah, so I agree with Renee. I think perhaps just looking at the scheme, there could be additional regulatory requirements which would require a buffer or something that could make it a bit different. But as a stance, it should be in substance the same. But there could be additional imposed requirements from a regulatory point of view that could change the measurement of these. But that I see is the only reason why it might be a bit different. Thanks.
Okay, so I think that comes back to if, you know, just reinforcing that original advice, it is different so that it can be explained in the basis for conclusions, just exactly why we've taken that stance on that. Obviously, if that doesn't prove to be the case, then we need to come back on that decision, but you'll advise us accordingly. Okay. So I think that's the final issue paper, Jo.
That's the final issue paper. Now, I'm not certain how you wanted to proceed. Did you want to do a quick walk through where we are on the draft DD, or just get the board to give me comments on the areas that I identified in 7.3, which is, do they agree with how we've restructured it? What SMCs should be included? Further application guidance. I mean, obviously there is still a lot of work to be done to get to this final ED, but this what we were I myself and the task force were concentrating on was restructuring that IS26 to make it more the flow better and make it more like an IPSAS. And so I'd like specifically to get the board's feedback on whether they think that's been achieved.
Yeah. Okay. Thank you, Jo. So, I mean, firstly, actually, I challenge the statements about, you know, a long way still to go. I think you and the task force between you have actually moved this forward extremely well. And it's very good to actually see that first draft pronouncement here. So thank you for that. I think we have taken a decision on the SMCs, actually, that third request there. So I think if we can then just go to the point that you've made, which is 7A in item 7.3, you know, the overall approach that you've taken. Are there any specific comments members want to make on that? Clearly, drafting suggestions can be given to staff offline, and I'm not proposing to do a page by page on this at this stage. But any concerns members have about the approach being taken? Yeah, Lindy.
Thanks. And I can't pinpoint exactly, but I think when we were looking at it, you know, if you take some paragraphs and move it to AG, sometimes you lose the context of the discussion. So I guess maybe it's just making sure that by rearranging or reordering, you know, as a person that picks it up for the first time, you can still understand the logic, or there's not something missing in the rearrangement of the material, because sometimes in some areas it got, you know, it just felt like something was missing and you would have to page back to the AG. So I can try and point those out, but that was just the general view when we had a look at it. Thanks.
Yeah, thanks, Lindy. So I think actually that, you know, I mean, it is a relatively short piece of guidance. It's only 10 pages in terms of authoritative guidance. So I think if you can go back and have a look at that with staff and raise any points where you have that concern, you know, and I think that needs to be done fairly quickly, actually, so that we have that view, you know, put in, so that, because what I don't think what we don't want to do is have rearrangements going on at the last moment. So I think if you have those concerns, if you know, you can see what's intended now, so please pass those through. I think really within the next week or so. I think that's right, isn't it? Okay, any other points? Renee?
Yes, so just on this point, Chair, it is an option to maybe not have AGs given the short, giving out the standard is short. I don't know if you would go as far as that. It was just a point of clarification. Thank you.
I mean, I don't think there's a right answer. I think the question is actually, is there any concern to what's been done at the moment? You know, I mean, there is a style point, which is we generally do have application guidance, and if that makes sense here, then so be it. But if, you know, to Lindy's point, if something needs to be in the core text, then so be it. So I think, you know, we leave that with staff and task force subject to members coming through on that. Any other points on, which I suppose is the linked point, is the second point, which aspects of the draft ED should have application guidance? I mean, it's kind of two-way point. I think probably, again, that's a request to board members and TAs and so on. If you have specific instances on that, please would you let staff know, really, I think by the end of next week, if we say, Joe, is that okay in terms of your time frame?
Yeah, so my time will be, I mean, yeah, obviously this project needs to progress. My time's limited because, as some of you know, I am moving back to Australia, so I'm in the middle of that move. So, so the sooner the better.
Yeah. and just to clarify, Joe is remaining with the board, but she's changing location, and so she's working around all the uncertainties associated with international travel and quarantine at the moment. Okay. One other point, actually, and Joe, I apologise for not just mentioning this to you. It did occur to me in reading the papers that the title Accounting and Reporting by Retirement Benefit Plans is quite a mouthful. Now, we have chosen to go the adaptation route rather than just a pure alignment project. And I wondered whether there would be major objections to actually just calling the standard retirement benefit plans, which is demonstrably different to IS 26. And is just perhaps easier to manage. I don't know whether anybody has any major objections off the cuff to that suggestion. I see thumbs up from a few members. Okay, good. So so we go with that, then it's retirement benefit plans going forwards. Okay, so thanks for that, everyone. I think, you know, just to reiterate, I think this has moved forward very well. So thank you, Joe, for your work on that. And also thank you, David, and the task force. I think you provided a lot of very good input that's enabled us to focus on the right issues. Anything, Joe or David, else that you want from the board at this point?
Not from me, thank you. No.
No, and not for me, but yeah, just yeah, so if Lindy could get back to me on just where there was maybe a gap that was missing, that would be great. Yeah, and if we have those examples of the financials, of the plans that David had mentioned would be great too.
Good. Okay. Well, thanks very much for that. And you know, that should put us in a good place, I think, then for what we have on the project plan, which is to move towards approval of the ED in the December meeting. Clearly, we need to keep that under review based on what happens in the intervening period. But I don't think we have any more substantive issues that we have to pick up other than what we have already on the table. Okay, so thanks for that. So with that, I think, Ross, perhaps go back to you at that stage in terms of reflections on the progress made at the meeting from the Programme and Technical Director's report point of view.
Thanks, Ian. And yeah, I don't think this will take that long, but there's one item that looks like it's resulting in a change from progress at this meeting, and that's related to the approval of the leases IPSASB based on ED 75. Because of the progress made, it looks like we'll be looking for approval in December rather than March 2022. So that's one change I'll reflect on the work program. Other than that, there are no proposed changes to reflect on the work program at this time, but just to note that normally in December, we do a more rigorous review of the work program in my program technical director's report. So you'll see that in December, where we'll have another look at all the timelines and kind of feedback thinking on that. So that's the first point that I wanted to note on the program and technical director's report, Ian, and maybe if we could see if there are any comments on that. And then there's a few administrative items that I want to note in relation to finalizing points at this meeting.
Okay, thanks, Ross. Just open up for comments on that specific proposal and anything else anybody wants to raise. Okay, so back to you, Ross.
Great. So I'll reflect that change on the work program. So you'll remember earlier in the week in the conceptual framework debate that there were a couple of follow-on drafting items on two items related to John's conceptual framework papers. Staff's just working to finalize those, and then we'll circulate those to the board so they can see how those, I'll call them subject twos to a decision, have been landed, so board members can feedback their agreement. I'm hoping to send that out by end of business today, but at latest it'll come on Monday. It's a short 2-page paper that just outlines clearly the issue that the board asked for clarification on and gives the staff clarification to those issues. And the other item I want to highlight is the decisions and instructions. So staff's in process of drafting decisions and instructions now. We'll go through our internal review process, so clearing those with task force chairs, board member sponsors, if appropriate, and then our internal review. Then those will be circulated to the board as per last meeting, likely Wednesday of next week, and we'll be asking for a relatively quick turnaround of 2 or 3 business days to finalize those so we can get working on implementing the instructions and moving the projects forward, drafting the minutes. Thank you.
Great, thanks, Ross, and we appreciate it's a slightly shorter gap between the September meeting and the December meeting. It's always a challenge. Mike, you wanted to come in?
Yeah, look, I'm sorry, I was too slow on my finger, Ian, on the previous discussion about bringing forward the leases one. I agree with the decision that Ross has provided to us. I just, because Lynn isn't here, I just wanted to make sure that we don't forget to explain now we may be out of sync with the RFI and what are the consequences, Ross?
Ross, back on that. I mean, clearly there is going to be, you know, paper on how we handle that. Also the interfaces with other guidance.
Yeah, thanks, Ian. And just to be clear, we've talked this through with Lynn. She's comfortable with the proposal and she's aware, and we've talked through the papers already that we'll plan to bring for December, including the paper on the link with the RFI and how those 2 projects will continue with the approval and then the RFI phase, to make it clear to board members how it'll work when we're asking for approval. So this decision is really just about changing our public facing work program to show what we're planning to discuss, and that we will actually be looking for approval. So all those papers will be prepared for December, and in the check-in meeting, we'll be finalizing the 4 minor items still outstanding on that project.
Okay, thanks, Ross. So a number of contingencies there. Okay, anything else from you at this stage?
Yeah, just one final item that I wanted to note from my perspective and from the staff perspective, and that's just a thank you to all of the members, in particular task force members and task force chairs, for their input and support of staff over the summer. We know it's a busy period and people are trying to take vacation in the Northern Hemisphere, and you know, it's always a tight process. And I can tell you from our perspective that it's really challenging to work remotely and to move these projects forward. So I wanted to give a public thanks to members, TAs, observers for their support, and also to highlight specifically the very hard work of staff over the summer period on all the projects. I can tell you there were a lot of big issues that we've been trying to land at this meeting. And I can tell you staff put in a significant effort to move things forward with the support of members and TAs. And sometimes I'm remiss not to give a good thank you to everybody for their hard work publicly. And I want to make sure that everybody hears that loud and clear, because it's been a real slog the last year and a half doing all this work virtually. And I really want to make sure that everybody appreciates how hard it is from the staff perspective to be in the position to have the good debates we had this week. It doesn't come easily. It takes a lot of hard work. And I know at the end of these meetings, from my time working on projects specifically, it can be a little deflating after your 3 or 4 months of hard work ends up in a lot of extra work. But I think I don't want staff to lose the perspective that these good debates and movement on projects wouldn't happen with all of the hard work of staff, and that the feedback that's been received is to reflect you know, the good progress we've made and more to go, but don't feel deflated, and, you know, keep working. It is a tight turnaround to December. We've got a really big amount of work on our plates on the staff side, but we're ready for that challenge with the support of staff and TAs. And I just wanted to say that publicly and make sure that that's noted. Thank you.
Thanks, Ross, for reminding us about that. And I think, you know, just to emphasise that I saw, you know, clap hands from you know, from many of the members to those statements. I think, you know, this whole thing actually is a team effort between staff and the board really can't do its job without good high quality material from staff, and I think we've very definitely been getting that, and I hope that we've reciprocated in terms of trying to give clear decisions and you know, instructions for further work. And I think, you know, the way in which things are moving forward you know, is looking promising. So thank you for that. And just to underline also the other thing that you know, I've been trying to emphasise in discussions with Ross and with staff is the importance that they do take regular breaks, that you know, we all need that. And I think they have worked around that, but you know, that's an ongoing challenge, you know, in terms of the fact that this has turned into a marathon rather than a sprint that perhaps we hoped it would be originally. So, and before closing the public part of the meeting, one of the things I wanted to do was actually just to update you on decisions that were taken by IFAC board following the nomination committee process in terms of board appointments and reappointments. Taking the reappointments first, going into next year, we have 2 board member reappointments. So congratulations to Lynn and Lucy on reappointment. Well done both.
Thank you.
Thanks, Lucy. Well done, and well done to Lynn, if you can hear us in the car. And Lynn, just to emphasise, there's plenty of clapping hands around the screens, which you won't be able to see. We will be having 4 new board members next year. So it's always a pleasure when you see somebody come through from a technical advisor to a board member, and that is the case in terms of Claudia Bayer, who will be succeeding Mark as the board member from Switzerland. So Claudia, I don't know if you're online at the moment. Yeah, I can see you. So if you want to just put yourself on view and receive the congratulations of the board, that would be fantastic.
Yeah, thank you very much. I hope at least you can hear me. I'm not sure.
Yeah, we can hear you, Claudia.
Yeah, so it was a great honor for me now to become a member. So yeah, then it changed a little bit the position. So it would be a little bit hard to find a new rule, but I am hoping I can work and help and support the board furthermore, and also you as a chair. Thank you very much. And I'm waiting to start my new position next year.
Okay, that's great. Thanks, Claudia. And I think it's fair to say, Mark, that we hope that you will still maintain your involvement in our work going forwards, particularly around statistical reporting, data, usage of the IPSAS data for that. So in terms of the other new board member appointments, we have a new board member from China who will be joining the board, Lian Yang, and she's a partner in one of the big accounting firms, but has also been involved in the implementation of accounting for taxation in China. With that appointment and Claudia's appointment, that will change the balance. We have been a gender balanced board during the current year. We will actually be the first standard setting board to have majority female membership for 2022, which did not go unnoticed at IFAC boards. So that's very good news, but in arriving at that, as ever, we're applying the point about appointing the strongest candidates to the board. And it was a very, very strong year, I have to say. The first time in my experience that everyone that we interviewed would have been an entirely credible board member. So the other two spots, we will have a board member from Saudi Arabia joining us, Abdullah Al-Motil, who is leading the implementation program in Saudi Arabia. So that's another first for IPSASB in terms of having a board member from that region. And I think we, certainly have benefited already from input in terms of what they're doing in terms of their implementation. And then last but not least, the fourth appointment will be from the German Supreme Audit Institution, Mike Esser-Mullenbach. So that's, I think overall, IFAC board and the PIC as well, the PIC observed the nomination process, were very supportive of those changes. And again, that increases the diversity amongst the board. So that was very well received. And I think, that does reflect both the increased diversity of the jurisdictions using our standards, but also those appointments do reflect the very much stronger interest, I would say, and the great credibility of the candidates applying for the board. So I think that was that's a good result. And last, but by no means least, in terms of the deputy chair, I'm pleased to say that Lindy has been reappointed as deputy chair for a second year. So Lindy, congratulations, and it will be great to have you remaining in that role. So thank you very much for everything you've done, and a personal thank you from me for what you've done in support already in the role, and very much look forward to continuing to work together in that. So that overall is the outcome of the nomination process for next year for the board. I think, clearly we've got plenty of challenges coming up next year. That's certainly the reason why as a board we'll be having the private session looking at, sustainability reporting. So the session on Tuesday will be just for board members. But I think in the meantime, just in terms of closing, I would say thank you very much for the support that you've given in terms of the discussions that we've had. You know, I think, you know, there have been times when we've had some robust discussions, but I think that's actually, I think the guidance, particularly around natural resources, will truly emerge stronger actually as a result of the debates and discussions we've had. I think, you know, we've had a lot of good input from across the board. So thank you everyone for what you've contributed. And I think at that point, Ross, unless there's anything else, I think I can conclude the public session. I think, Ross, we're on to the social now, if I'm right.
Yeah, that's right, Ian. I just wanted to give one last reminder that because of where we've gotten to on the agenda today, the Tuesday session will be a board member only closed session to discuss sustainability, because we're through all of the public items. So technical advisors, observers, and most of the staff do not need to attend the Tuesday meeting, just members.
Great. Okay, so I think now we're at a point where we're at very well earned social. And again, thank you everyone. Have a good weekend and enjoy the next